I'd like to welcome you to another Kali Tutors tutorial session. In this tutorial session, we'll be focusing on FAC1501. The main objective of this tutorial lesson is to show you how to compile a bank reconciliation statement. Without wasting your time, let us look at the introduction to the topic. If you recall all the transactions that we discussed in this module, you'll realize that the bank keeps a record of the transactions of a particular company, and the company itself records the transactions that takes place. Okay, so what normally happens is that the bank and the company arrange that at the end of the month the company will receive a bank statement. Okay, so since bank transactions made by the entity are also recorded in its cash receipts and cash payments journals, the balance shown in the bank statement should agree with the balance in the bank account in the books of the entity. However, this is rarely the case. Some of the reasons why the two balances do not agree are outstanding checks, outstanding deposits, direct deposits, bank charges, interest charge on overdraft, dishonored checks, and mistakes and omissions made by both the entity and the bank. Okay, so the question now is, what do we mean by outstanding checks? Okay, so these are basically checks issued to suppliers during the statement period but which have not yet been presented to the bank for payment. Okay, and your outstanding deposits, these are deposits made by the entity during the statement period but which have not yet been credited by the bank. Direct deposits, these are deposits made by customers directly into the bank account of the entity. And in terms of your bank charges, these comprise of service fees, cost of checkbooks, commissions, ledger fees, and so on. Because of the nature of these charges, the entity only becomes aware of them when the bank statement is received. Interest charge on overdraft. This is the cost of overdrawing the bank balance. Again, the entity only gets to know of this type of cost when the bank statement is received. In terms of your dishonored checks, these are checks received from customers but which were not paid by their respective banks because the customer do not have sufficient funds. Okay, so from what we have just read, there are two classifications that we can have. Okay, we can have entries in the cash receipts and cash payments journals but which are not in the bank statement, and these can be classified as outstanding checks or outstanding deposits. Okay, we can also have items in the bank statement but which are not in the cash receipts and cash payments journals. Okay, this could be your direct deposit, bank charges, stop orders, dishonored checks, interest on overdraft. Okay, so let us look at the steps that are involved in compiling a bank reconciliation statement. Okay, so they say after the reasons why the bank balances do not agree have been identified and classified, the bank reconciliation can begin. The following steps are taken to prepare the bank reconciliation statement. Okay, so your step number one, you are supposed to compare the debit column of the bank statement with the cash payments journal and vice versa. Tick off items which appear in both the bank statement and the cash payments journals. Note any outstanding items. Okay, compare the credit column of the bank statement with the cash receipts journal and vice versa. Tick off items which appear in both the bank statement and the cash receipts journal. Note any outstanding items. Okay, once you are done with these two steps, the next step is to adjust the cash receipts journal and the cash payments journals with items which are in the bank statement but not in the cash receipts and cash payments journals. For example, direct deposits, bank charges, and dishonored checks. Okay, remember when we were discussing asset accounts, we included the bank as one of the accounts. Okay, so what we are referring to here is the bank account in the general ledger. not the bank account in terms of your account with a bank. Okay, for example, if you are banking with ABSA, okay, your bank account is something else. Okay, that's not what we are referring to here. We are referring to the bank account in terms of the general ledger accounts. Okay, so they say use the totals obtained from the adjusted cash receipts and cash payments journals to prepare the bank account. This bank account here, we are referring to the bank account in the general ledger. Okay. Prepare a bank reconciliation statement using the outstanding checks and deposits and correct any mistakes made by both the bank and the entity. To simplify the preparation of the bank reconciliation statement, always start with the balance as per bank statement. The final balance on the bank reconciliation statement should agree with the balance of the bank account. Okay. So that is exactly what we are going to do next. Okay. I'll take you through an example and we'll use these 5 steps. Okay. So let us look at example number 1. Okay. So here you are given the bank statement of AM Dealers for September. Okay. And you are also given the cash receipts journal, but they've only focused on the what? On the bank column. Okay. They also give you the cash payments journal, and you are given the what? The bank column only. Okay. So if you have these 3 here, you should be in a position to compile a bank reconciliation statement. Okay. So let us look at what they want us to do, the questions. Okay. They say prepare cash receipts journal and the cash payments journal, okay, for September. Prepare the bank account in the general ledger, and lastly, prepare the bank reconciliation statement as at 30 September. Okay, so what you're supposed to do, remember, based on your step number 1, you're supposed to compare the debit column of the bank statement with the cash payments journal. Okay. So this is what you're supposed to do. You'll tick off whatever is here and also in the cash payments journal. Okay. So once you are done ticking off all items that appear in both the cash payments journal and the debit column of the bank statement, you will then take the items that only appears on the bank statement and then include them in the cash payments journal. Okay, that will help you adjust the total. As you can see, the current total is 3,136 rands. After adding the items that only appear on the bank statement, this total will change. Okay, so in this case, if you compare the 2 tables, you will notice that this one is appearing on both the bank statement and also the cash payments journal, and this one is also appearing there, this one is also appearing there, this one is also appearing there, and so on. Just use a pen or something to actually mark them off. Okay, so this is what you're supposed to do. You'll simply mark whatever you think, whatever is in both. Okay, the cash payments journal and the bank statement. In this case, all these ones are in both the cash payments journal and the bank statement. Okay, so after doing that, you'll notice that in terms of the cash payments journal, it's only these 2 that are not on your bank statement. Okay, so what you're supposed to do next is to go to your bank statement and then mark the corresponding items. Okay, in this case, okay, let's just delete that. In this case, we know that this one is there, this one is there, this one is there, this one is there. I think also this one is there. Okay, and the remaining items are not there. Okay, so for those remaining items, these ones and these ones, we are supposed to take these and then add them on the cash payments journal, okay? And they will help us adjust our total, okay? So at the moment, let's just delete this and go back to the cash payments journal, okay? So this is what you're going to do as the first step. You'll mark these ones, okay? So whatever is marked here means that it is appearing on both, okay? So this one and this one and these ones, they are not appearing on the what? On the cash payments journal, okay? So you'll take the ones that are not appearing here on the cash payments journal and then add them to adjust this total, okay? So this is what they're saying. Outstanding items will be service fees, which is R1 plus R5, okay? This is a service fee, and also this R1 is a service fee, okay? Unpaid or dishonored check, this is the 160, okay? And then the 300, which is a debit order, and so on, okay? So that's basically what you're going to do. And then you're going to compare the credit column of the bank statement and the cash receipts journal. You'll use the same process, okay? And then mark whatever is appearing in both. So this one, since it is only appearing on the bank statement, must be added to the cash receipts journal to adjust the total, okay? So that is all that you're supposed to do. Just take whatever is appearing in the bank statement and add it on your cash journals, okay? So in terms of our cash receipts journal and the credit side of the bank statement, you'll notice that this 480 only appears on the cash receipts journal, and the 200 only appears in the bank statement. So what we are going to do is we are going to take the 200 and add it to the cash receipts journal, okay? But whatever is appearing in the cash journals and not on the bank statement must be added to the bank reconciliation statement so that the bank can continue processing those monies, okay? So in this case, this 480 will be added to our bank reconciliation statement, okay? So that is basically all that you're supposed to do, okay? So let us move on and then use these totals to actually compile our bank account, okay? So now the next step here will be to adjust the totals. Remember, this was the total for your cash receipts journal without adding the outstanding items, and then after adding the outstanding items, this is the new total. You will take this new total for your cash receipts journal and use this on the bank account, okay? So cash receipts will be debited and cash payments will be credited, okay? So the new total is 4,260, and then you will also adjust the total for the cash payments journal. Remember, without adjusting the cash payments journal, the total was 3136, and after adding the bank charges and the dishonored check and the insurance amount, then the new total becomes 3612, okay? So now that you have adjusted the totals for your cash receipts and your cash payments journal, you can compile your bank account, okay? So your opening balance for the bank account in this case is 2,400. So the question is, where is this 2,400 coming from? Okay, let me show you. That is the opening balance for your what? For your bank account, okay? So this is where you got the information. They told you the balance of the bank account in the general ledger of AM dealers as at 1 September 20.1 was a favorable 2,400. If they say it's a favorable 2,400, it simply tells you that they had a debit balance, okay? If they said unfavorable bank balance, it will mean that they had a credit balance. The reason being, a bank account is an asset, okay? So a debit balance for an asset account is a favorable balance, okay? So now that you understand where this 2000 comes from, the next thing to do is to simply capture the totals for your cash receipts journal, okay? In this case, the total was 4,260, and this one tells you where this total came from, okay? This is your cash receipts journal, okay? And the totals for your cash payments journal will be credited, and this was 3,612 francs, okay? So after writing these two here, you would have written this one, okay, and this one here. This value here comes from is basically the total of these two, okay? So you would have compared this value here and the total for these two. Whichever value is greater will be written here and here, and then the difference between the total, okay, for the greater value and the total for the lesser value will be written here, okay? So this value is basically 6,660 minus 3,612 francs, okay? And this one will give us the balance, okay? So you write it here and then you copy that, you write it here. So as you can see, this account, the bank account, has a what? A debit balance, okay? After doing this, you then move on to compiling your bank reconciliation statement, okay? So in terms of your bank reconciliation statement, you'll notice that every item that was included in your cash journals but not in the bank statement must be included in the bank reconciliation statement. Okay, for example, items that appeared on the cash receipts journal will be included in the credit side of the bank reconciliation statement, and items that were only included in the cash payments journal will be included here in the debit side of the bank reconciliation statement, okay? So in terms of the bank account and the bank statement, okay, if the bank account had a debit balance, you will include the total or the balance in the debit side. If it had a credit balance, you'll include that in the credit side, and you'll do the same in terms of your what? Of your bank statement. In this case, we know that the bank statement had a credit balance, okay? How do we know that? This is your bank statement, and you will notice that it had a positive what? A positive amount, so it had a credit balance, okay? This simply means that the company had money in the bank, okay? In terms of the bank account, the total, we got the total from here, or I mean the balance from here, okay? So this is a what? This is a debit balance, so that's what we are going to do. In terms of the bank account, we have the debit balance. In terms of the bank statement, we had a credit balance, and then we include these in their respective columns, and then we determine the totals. The totals for these two must agree, okay? And after doing this, you're basically done with your bank reconciliation statement. So the next example that we are going to tackle is from your self-assessments, okay?